If you have not heard about SNR market structure, then I think this video is for you. And we just like to go straight into business. So I'm going to be using the daily and then the H4 time frame, and then later we can use the lower time frames to just understand something. So here we want to identify this place as a daily level, and we are doing this because we can see that that's a resistance level in the daily. If we go to the line chart, we can see that. So then when we mark it, we can mark it this way, and all we want to do is to go to the lower time frames and see what is going to happen if market comes here. So here in H4, we can see that price has come to this level, and we have the first rejection, and then price came and took this highs out and then went to the downside. We are using the movement of price to see what is going to happen. So we can use the line chart, you can use the candles if you are okay with it. So what we want to do is to let market break structure to the downside, and then we can start to trade the market along that. So if we look at it, this was moved to the downside and then up here. This is the last push that pushed market into the zone before we have this breakout. Now this is the very point you have to take note, because now the market has turned from bullish to bearish on a daily time frame, on a daily zone. So you want to trade it back from this daily zone to another daily zone by locating it. If we go to the line chart, you can identify some levels. This is one level, this is another, and then from there market will come and tap one of them, and you can have market trade to the downside. You locate the next daily support, and mostly market will go to that side. So this is our second example. We can take this level here. When we draw it like this, we can see we have a breakout here, and the market came back to it. So the first one was just a clear classic level. This one I'm using breakout. So we can see market came back into the level. You want to wait till market touches the level like this, rejections here, and then you can move to the H4 time frame. So when we go to the H4 time frame, we can see that the first time market touched the market here, the level here, it did not break this last push that pushed market to the level. So this is telling you that market is still not ready to continue to the downside. And then we have some consolidation here. Market push into the level for the second time, and what do we get? A breakout to the downside. This is the moment market has told you that now we have turned bearish and will continue to sell to the downside. So you can always use the line chart to you identify the last push, and when that push gets broken, then you know that the market has turned bearish. So that is it. And from there you can locate the levels, this QM here and then this level here. Almost always likely that market will come, and this was the other breakout level. So it used the breakout level. From the breakout level, you don't trade directly, you wait for confirmations here before you sell. You can always sell directly from this level here, and then sometimes if the stop loss is okay, you can take it directly to from here, but you don't sell directly from the breakout level. You wait for some confirmations here, then you can take the trade. So for the third example, inside here we can see that market has broken this level and then this level. This is in the daily time frame. So we understand that okay, market has broken structure to the downside. It will pull back into levels here to be able to sell. So let's focus on this level here. We got it like this. So sometimes in SNR, do not worry about the sweeps of these liquidities, although with liquidity we understand that this was liquidity, but in SNR, as far as the level does not break, it's only a rejection. That means the market has respected this level, and you can now go to the lower time frames to see what is happening. And if I say the lower time frames, I mean H4, because H4 is the control time frame for the daily. So in the H4 time frame here, we can see how market came and touched reject, and then this was the last push that pushed the market there. Market came from here and then broke it, and then we got this pull back into some levels there. And if we want to understand the levels, we take it from here. This was the last candle. Can draw it from the open, and then we take it all the way up. If you combine this with H1 and H2, sometimes M30, you will understand where exactly to sell this market from here. But the good point is that with market structure, we got this is the last level. We push to the daily level here, which we know is daily. So from there, we broke down, and now we know the market is bearish. We wait for the pullback into the levels. The first level was here, and then the second level is this one here at the extreme, and from there market continue to sell to the downside. So what I want you to get into your head is this change or shift in market structure, and this is on the daily time frame. So if you are on the daily time frame, this is support, resistance is going to move to another what support in the daily. So it trades from what daily to daily, and that helps you to be able to always ride the trend. Okay, so let's focus on a buy setup right now, and let's focus on this level here. This is a daily level. We can see that this daily level is the level that market came here and then had this rejection and then this second rejection here. So we want to go into H4 to understand what happened here before market flew to the upside. So here in the H4 time frame, we can see that the first time market came to the level, we never got any breakout to tell us that the market was going to continue going up. The last level that pushed the price to the daily level in H4 was this resistance. That means that if market has to break and go to the upside, it has to break it from here. Because of that, since we didn't break, this market was telling us that there is no still change in market structure, so we cannot just take the trade and start to target the daily resistance. Now market came for the second time, and the level that push it is this level here. This is the level that push market to the daily level, and from there the last push now came, and here this momentum candle broke it. So as at this point, that's where we now go to know that the market has turned what bullish, and then we can go all the way to a daily level here. And if you remember, this is the forex example. So it started from this daily support, and then when it confirmed that it was going to go, it moved from this break and retest level, and we move all the way back to this daily level here. So it traded from daily support to daily resistance over there. Now, if I were you, I would be having some questions in my head. So does it mean that we wouldn't have been trading this market from this place all the way up here? The answer is we would. And if you don't understand, you should watch the previous video that I made on market structure. You will understand how the movement I explained there. So with this one, we have to go to the lower time frames. That means that there is something happening here in the lower time frame that you can use and be able to get into the trades always early, even before H4 breaks, because H1 is the control time frame for H4, and we can use that. We can use M15 and M32 if H1 the level is far like this in H4. So now here in H4, we can see the last push was this level here, which pushed market to the daily level, and it was never broken until here, until this place. Market now broke it. So we could wait for this level here, and then we could trade this movement which we saw in the H4. So if we come to H1, we could have taken this trade that pushed to the upside, because H1 has broken structure. That means we can take the trade and trade it to the H4 level that is here. And we can still even go inside to trade this movement that is here. You see this movement that has happened? That means if we wanted to take that movement, we have to go down again to see the movement that has happened within this. So if we mark here, this was H4 high, and then this is the lowest low. So that means that whatever happened between this high and then low was just consolidation. This is sideways markets. So we cannot do anything about it until it breaks here. But then within this sideways market, if you go to the lower time frames, you will see a break of structure there too, and then you can use that to be able to take decisions. So let's move to either M15 or M30, and then we can see what is happening there. Okay, so now we are within the H1 range, which we have identified. This blue lines here, we did it in H1. Now we come back to M15 here. So we can see now we have price to move all the way up to H1 because it's trading from H1 to H1. So we understand that M15 here would break structure so that we can trade back to the H1 zone. So we can use that to get inside the trade early enough. So when we look at it here, we are not going to wait for this high again. We have to follow the structure that is within here. So if we look this structure here, we can see how it came, broke from this break of structure. We understand we can trade it from here back to this place. But since we got here, we know we are on daily time frames. So we can start to look at the structure, and when we pick it, we target daily H1 first. If it breaks, we target H4. If it breaks, then we go to what? Daily time frame. So if we look at this place, the last push to the downside was this guy here, and from here we can say this was the last push. If we go to the line chart, we can see this was already respected, and this high here was the one that pushed market into the daily time frame, and then we got this rejection all the way back. So we can see we broke this small one, and then we broke this one too, we broke this one too. So all these three levels were being broken. That tells us that M15 has turned bullish, and if it breaks, immediately it breaks, we don't want to be selling it from these levels. We have to wait for it to pull back into the discount levels, if you can say that. So from here we can take it from this place. You see it came and then tap on that same discount level that caused the break. So from here that could be an entry, and we break. After that, we can see that these levels which push market to this level again got broken, and this level could not be broken, so it has to push back. And from there, even if we are still holding this trade, it will still be valid. From here you can even take more trades, and you hold it. We get to the target should be the H1 time frame, and that is it. From here H1 now got broken, and we got a pullback to this level we already saw in H1, and from there we can take this as the H1 has turned bullish, and then we target the H4 levels here. From this level there was some H4 level there, we target it, and now from here H4 came back to the level, and within this we got a break. This was the H4 break, and then market push all the way to some daily levels here. So this is it. I wanted to do one extra video like this to be able to explain the structure, as it is very, very important. And I combine the structure with the storyline. You need to understand, I'm already using the storyline a bit here. I'll do a video too on that, where you have to understand how the market moves from daily to daily, weekly to weekly, and H4 to H4 to be able to understand everything. Subscribe and let's push the channel. Let's push our trading to a level that we ourselves will be proud of. See you in the next video.